All right, let me try this again. I think that sounds a little bit better. So, all right, folks, just want to try to do a real quick video just on reviewing my portfolio, and just to be transparent with people, to show people my personal portfolio holdings in a bearish environment. So I am, leaning strictly towards the bearish side. I've been this way for several months now. So I've just been trading bearish positions. It's been working better for me than to try to trade a bullish position within this market. So bear with me 1 second. Okay. So, but before I show you guys my portfolio, I want to continue to draw your attention towards this particular tool within the Wall Street Journal. And again, for those who are not friends with me on Twitter, here's my Twitter page. I pinned this to the beginning of my Twitter. This is something that I got from AJ Monty, who is with the Market Rebellion crew. And this is something that he shares on his Twitter as well. And in his weekly review, he also goes over the 52-week new highs and lows as it relates to this wallstreetjournal.com journal. And so I decided to use it as well and keep it pinned to the front of my Twitter feed. That's the easy way for you to get to that particular tool that's within that wallstreetjournal.com page. My Twitter feed is at God's Child Tim. So here's my Twitter page. Now let me switch back to this tool. So again, folks, until this narrative change, I will remain trading heavily on the bearish side. So most of my positions will always be heavily towards a bearish setup. Here are the new 52-week highs and lows. This is pretty much the overall breadth of the market. Whichever side is higher, then that's normally the overall sentiment of the market. So here's the new 52-week highs. Okay, so if the new 52-week highs were the highest between the highs and lows, then I will lean towards more bullish positions. But right now, as you can see, this is the New York Stock Exchange tab, NYSE, and we have only created at the end of the trading day on May the 12th, after 4:00 p.m. We only created 11 new 52-week highs. But look, I only got to scroll down that far because the new 52-week lows pop right up. Here's new 52-week lows, 1,728. That is a huge difference of a ratio. Look at that. Only 11 new 52-week highs and 1,728 new 52-week lows on May the 12th, 2022. Again, folks, that is a sign that this market is in free fall. Now let's switch over to the NASDAQ. I'm sorry, folks, that was the NASDAQ. So let's switch over to the New York Stock Exchange. My bad. All right, this is the New York Stock Exchange. This even looks more dire. So New York Stock Exchange showing only 4 new 52-week highs, and look how many new 52-week lows, 1,046. So if this is not a bearish market, and those folks who are still trying to, create a bullish market and continuing to stay on the bullish side, they're going to be in store for a lot more pain until the sentiment of the market changes. All right, now let me show you guys how I'm trading this market. Again, this is just a real quick video on how I'm trading this market, how I have my portfolio set up until the trend changes. Don't fight the trend, trade the trend, stick with the trend. Again, don't fight the trend. So let me find. All right, so this is how I have my overall portfolio set up. I'm not going to run through each one of these and show you guys the actual chart setup, but so just looking at this first slide here, this is all of the positions that I have. Some of the positions I have in my portfolio As you can see, they are mostly put options that are geared towards a downturn in the market. So I've been rolling these IWM put spreads every time I get about 100 to 200. Every time I get up to about 200% profit, roll them and continue to stick with that narrative. And a lot of these I picked up just by sticking with the narrative and looking at the options activity. Unusual option activity continues to pop up within the IWM ETF itself towards the puts or the bearish side. So I continue to roll down, I'll continue to take profits and roll my strikes down and continue to trade this down until the sentiment changes. So I'm currently still holding a IWM put spread, which this one expires, you can see, June the 17th. This is a put debit spread where I bought the 180 strike puts and sold the 172 strike puts. Currently still positive by 133 bucks. The TLT, I just jumped into a TLT position. Got 2 contracts of this one recently. Reason being, the TLT is normally one of the bond tools that normally goes up. This ETF normally goes up when inflation is starting to peak or starting to reverse. So I believe we may be at a point where inflation may have topped out. We have to see how that pans out. But this ETF shows some unusual call option activity, so I decided to follow as well for right now. So I jumped in with a call spread. This one's is a debit call spread. I bought the 119 calls and sold the 125 calls. I just opened this position, I want to say yesterday, currently down by about 53 bucks. I have 2 contracts there. Natural gas play, still thinking natural gas could possibly go higher. So I jumped into another UNG position. Doesn't spot the June 17th, 27 strike call, sold the 35. Now here is a put option, MQ, saw some unusual option activity in that one a little while ago, 5 strike put. Another IWM position here, doesn't expire until July the 17th and July the 15th. Then that's a put spread. I have an XLF put spread. Doesn't expire till July the 15th. This IWM put spread is up 376 bucks. This XLF put spread is up 38 bucks. Apple, for those who've been following me about Apple, I told you, I was telling folks, I said, if Apple drops below 150, there goes the market. I'm telling you guys, Apple drop below 150, and this market is going to struggle to find its footing. We may have some choppy sessions, but those choppy sessions will probably end up by the end of the week with a market going lower because Apple finally drops below that 150 level. And I can see Apple folks going down below 130, before this year is out, maybe even before within the next couple of weeks or so. We could probably see Apple below 130. So I jumped in with the Apple put spread. As soon as I saw Apple getting very, very close to that 150 level, I ended up jumping in. Actually, I closed one out already and rolled down to the 145s. I had a 155, I think, put spread. Then closed that one out, took profits on that one, and got into another Apple position. This one is a longer dated one, doesn't expire till July the 15th with the 145 strike put, sold the 125 strike puts, and this one is already up 115 bucks. HYG still, she continued to see massive put buy in HYG. Folks, I've been playing this HYG play all year long and just continuing to take profits and roll down to lower strikes. This has been a great year so far if you've been playing certain put positions. So HYG, this one is a the spot to July the 15th. This one I bought the 79 strike put, sold the 72 strike puts. Currently still up 136 bucks. The triple Qs will not fare well in a high inflationary environment. So this one, probably going to be taking profit soon on this one because I think I may have already been close to this 288 strike, short strike, or close to it. So we'll have to see how it pans out. But currently up about 60 bucks. Bought the 298 put, sold the 288 put. JD.com saw some unusual option activity. And this one expires next week, so this one has to move quick because time decay ticks just like that. With the 45 strike put, sold the 40 strike puts down about for $34 right now. EFA saw some unusual activity in that about a week ago. With the 60 strike puts, so this one has about 2 weeks left to work. PLAY saw some unusual option activity in that one too. Another put spread, 40 sold to 35s, up about $90. That was into that probably about over a week ago. MPWs, another one saw some unusual option activity. That one doesn't inspire to June 17th, 4 to 18 strike put, so the 16s up about $12. KRE, this is a new one. Just enter this KRE on today, May the 12th, 2022. Got a couple contracts here. With the 59 strike put, sold the 54 does inspire to June 17th, right now down about $50. IWM, here's another IWM position that I added. Again, IWM I think is just like the Qs. IWM does not fare well in this type of environment that we're in. So for the 175 put, sold the 160, up about $34. EFA, another one that shows some unusual activity. What a 67 strike puts, sold the 58s. Had this one also for about a couple of weeks, up about $92. FEZ, another one that I recently entered, shows some unusual put option activity. What 36 put, sold the 30s, down about $15. And last but not least, sorry about that. Last but not least, the ARC fund. This ARC fund, this is another one that I just been pretty much shorting or playing to the downside with put spreads all year long. So this is, I got back in ARKK with 39 strike put, sold the 32s on this one. Doesn't inspire to July the 15th, up about $6. Another IWM. This one inspired to August 19th with the 180s, sold the 155s, up about $239, $240. Another HYG, September 16th expiration with the 80s, sold the 65s. Been in this one for a while, up about $223. XLP, another put spread. Been in this one's for a while, expires September 16th. 73 put, sold at 66, up about $12. HYG, another one, expires September with 82 put, sold at 75, up about 246. MPW, 17 strike put option. Bought that one, doesn't expire till October, up about $28. IYR, this is a long-term play. I plan on sitting on this one for. I think IYR has a lot more room to the downside, so I'll probably hold this for a while longer until we get closer to that 85 strike. I bought the 105, so the 85. Spending this one for a minute, up about $460. GDX, longer term play. I think eventually gold may find a bid, so we'll see how that happens. This one doesn't expire until December the 16th. Got some time for this to play out, so I'll be keeping a close eye on gold to see if we get any kind of bid between now and the end of this year. Bought the 60 strike calls, sold the 70s against it, up about $20. DIA, this is a longer term play, folks. I really think the overall, we'll probably see the Dow Jones maybe drop significantly more by the end of the year. That's my ultimate call. So this is a longer-term play. It was very inexpensive when I bought this. It was a very cheap play. Bought this a couple of weeks ago. Doesn't expire till January the 1st. So between now and January 1st, I'm pretty much think that Dow Jones or the Dow Jones Industrial Average ETF will have a significant downturn over the next 6 to 7 months. Right now, it's down about $20. So that is my portfolio. That is my synopsis on what we can expect to see. Join me this weekend as I do a full market review after the closing bell sometime on Friday. And I will post that sometime this weekend on my YouTube channel. All right, folks, this is all I wanted to share with you guys. And hopefully this is something that you can use or find something here that may interest or tickle your fancy. All right, have a good day.